When you invest, even in cash, you are taking a risk. All investments carry some sort of risk, but the level of risk varies depending on the investment you choose. The higher the risk, the higher the potential return, and the higher the potential loss. Thus, in simple terms, shares are one of the riskiest asset classes you can hold. Ultimately, risk is the permanent loss of capital, so managing risk is crucial. Asset values fluctuate, which is known as volatility. However, fluctuation of a value is not a permanent loss of capital unless the loss is present at the time of sale. Each type of investment has its own associated risks, some of these being market risk, interest rate risk, currency risk, political and economic risk, liquidity risk, and sector risk. Markets are constantly moving up and down. Where markets fall, it's commonly known as a drawdown. This graph shows the maximum drawdown drop in a given year compared to the total return achieved at the end of that year. For example, consider 2006 and 2012. In 2006, markets fell by 10%, but were up 17% by the end of the year. Similarly, markets fell in 2012 by 11%, but finished up by 12% at the end of the year. Whilst drawdowns are hard to bear, it should be noted that they represent investment opportunities, allowing fund managers to buy assets at lower costs. Time will reduce the effects of volatility on your investment, as this graph demonstrates. It shows you the maximum drop of a given stock market and the length of time it's taken for that drop to happen compared to the time it's taken for the market to come back up. For example, consider July 1990 and 2007. In July 1990, markets dropped by 20% over 3 months, but recovered in 4 months. In 2007, markets drew down by 57% over 18 months. It took 48 months to recover. Using a portfolio and holding a wide range of assets will help reduce risk. Choosing the right level of assets in a given portfolio is fundamental with investment management. To find out more about the contents of this video, please speak to your advisor.